everybody. Welcome to TraderMerlin Show. It is your Monday edition. Hope you had a great trading day out there. Judging by the chat out there from Big Ab, it was a good day for him. Hello, Okanola, Terry, Zach. Zach already retracted his message. I'm hoping it's something nice that you said out there. Vernon, Dana, Tom, Thomasina, and Jorge. Good to see you guys, and Ron as well. I'm sure many of you will be joining here in a little bit. So, hello, everyone. I was going to go through economic stuff to start with, but really the only thing noteworthy from an economic perspective was the Empire State Manufacturing numbers, which came out less than expected, but still above zero. A little bit of a negative start, but the markets just shrugged that off, as you guys saw. We had pretty big pops in just about every index out there, and I will start us off there. Also going to open Q&A, so many of you that sent in questions, Marcel, Tim, and a few others that sent in questions, I'll get to all those on today's show. I had a chance to build out a little bit of graphic support for some of your questions, so I'll do my best to get through all of it as I can. So let me go through the market rundown just to get you guys an idea of what happened out there today. Worst performer was the 10-year, but we don't usually pay too much attention to that. It hasn't been, well, it's noteworthy, but just not that noteworthy today. What is noteworthy was gold. Again, we've been talking about how gold has been in this kind of interesting little downtrend for the past 3 months, really just slowly giving back its monstrous gains that happened at the end of July, or really the month of July. Today, just barely up, 0.09%, so nothing noteworthy there, but now it starts to get interesting. The index is all looking really good today. Now, the NASDAQ's still struggling because some of the Fang stocks, we'll talk about that as well, but it's going back up and challenging these highs it achieved last week, and also you can see back in mid-October we hit that same level right after we hit that peak in September. So really sideways action, but it was a 0.9% gain for the NASDAQ 100 futures to over 12,000 again today. We're at 12,041 on the day. S&P, which I am not short. Don't worry, guys. I'm short the Russell, surprisingly. S&P looking even better. Now, if you guys saw Tilly Allison's weekly market outlook, she was kind of pointing at this as the 160 mark on SPY, or sorry, the 360 mark on SPY as being a bull trap. That's where it'll gap up, get everybody in long, and just come ripping back down, which it looked like it did. But this week is off to a hell of a start. The chart don't lie here. You can see that the nice big green candle opening near the lows, closing near the highs. That's pretty darn bullish, up 1.29% to 36.28 on the day for the S&P. I don't know why I have SPY in here. We don't even need the SPY. But Russell 2000 was your best from an index perspective, 2.39%. Everyone just flooding to small caps. Still, very interesting to see that money flow out of the NASDAQ, and it seems like this is the haven where people want to be putting all their money into. So Russell still benefiting significantly, 2.39% gain today, 41-point jump in the rut to 1785, and of course that all-time high you guys see just a couple days ago, all-time high is 1815, which at this rate we could hit that tomorrow. Crude oil was your next one, and this one also looking pretty good just from a day's gain, but not really out of the woods yet with regards to its sideways action. You can see for 2 months, it's just really been sideways. It did make some new lows, which had me thinking we might see some more sell-off, and then it just erased that sell-off, and now we're just back to sideways again. That $40 line, 40.69 line has been there for quite some time, and you guys can see really back into June, we've really been kind of stuck on that line, so nothing really noteworthy there. Very noteworthy is this one. Bitcoin, holy cow, there we go again. Another nice day for Bitcoin, up 3.04%, 16,765, and my guess, again, is 20,000 by the end of the year. I don't think that's a stretch at all, considering how much we've seen it move in just a very, very, very short period of time. Yes, I guess Walter says Dow as well, really close to 30,000. Yeah, that'll probably, let's bring up that one. Let's go, I usually don't even have it on the list because we removed it years ago, just because people didn't, it's just too many things to talk about, and I don't want to spend all the time doing a CNBC type of market recap show. Anyway, here are your Dow futures. You can see today 29,908 is where it closed at. Let me get that line out of there. Over the course of the day, it hit an intraday high of 29,998. So for those of you that are looking at round number psychology, whole number psychology, which I'm a huge fan of. You guys saw David Warner last week talking a bit about how there's this whole number theory and quarters theory for him. 30,000 is clearly that big number, and it wouldn't have surprised me to see a day like today. I actually thought you're going to see one of two things happen. It's like going to hit that 30,000 mark like it did, 29,998, and then have an aggressive sell-off as people are shorting before it gets there, or a bull trap, which will be all of a sudden where it rips up aggressively through it and then comes screaming back down. But we'll have to wait and see. Didn't get above it yet. As you guys can see on the price chart today, was super, super close. We did, in fact, get right to it on the 9th. So this is the second attempt we've had at breaking 30,000, but it has not done it. It hasn't even gone up a tick above 30,000. It's on the dot. So keep your eye on that one on tomorrow's trading session. All right, so that will be it. We're not done with the chop yet. Be careful. Totally agree. I think you're seeing lots of chop. Are you talking market-wise, Big Ab? I think market-wise, we're not done with the chop. Bitcoin, I think we might be done with the chop. I think you're seeing that thing really all of a sudden start to get some legs of its own and show some pretty nice upward move. No chop there. Index-wise, yeah, you are seeing a lot of chop back and forth. The good news for anybody who's holding long is we did end up breaking above some, those highs from September and October. So that's obviously a pretty good view there for the market. Okay, let me go to listener questions. So I want to make sure I get through all of these because I always say I will and then I don't, and I apologize, and So I had to make a clarity for this one. This was I was talking about yesterday on Friday's show. The question came up of what market sectors do I see shorting or going down, and I mentioned the Fang stocks, and Yuang sent this message in at TraderMerlin@gmail.com. Says you talked about shorting Fang stocks, but you're also forever long Amazon. So short in terms of short term and long in the long term. Absolutely, guys. I do not think at all that if you are a long-term investor that you should be thinking about going long-term bearish on Facebook, Apple, Amazon, Microsoft, or Google. I think all those companies will continue to go up. I just think that as a market timer, that there will be some significant pullbacks. And if you look at the way the money has flowed over the past few months, it's poured into the Fang stocks. In my opinion, far more exceeding where it should have been. And today what you saw was Fang stocks didn't really do that well, but what was really moving the market? It's all those beaten down stocks. We talk about this on Friday's show, is that money will start to rotate in if there's signs that economy is going to start to stabilize. So what will happen is there will probably be a drift down in Fang stocks. I hope it's an aggressive one as people pour in and buy undervalued companies. But yeah, obviously long term, how can you shoot against those ones? Facebook, I think, might have some of the bigger problems, but they've entrenched themselves now. So barring some major regulation and breakup, which will probably be good for the Fang stocks anyway in the long term, yeah, long term, stay in those ones. I just think you're going to have a nice pullback as this money rotates from one market movement to another, and then it might actually create another opportunity down the road if you do see the Fang stocks sell off quite a bit to buy back in to Google, Facebook, Apple, Amazon, those types of companies out there. Let's see. That was first question. Number 2 was, there were a couple interesting specific trade ones. I normally don't go too into specifics on trades because some people view that as being a recommendation, although technically doing this show, it's called one to many, so it's not really a recommendation. And of course, there's litigious stuff that goes in when you're giving recommendations. But since it's a general podcast, video to many people, I guess I can give recommendations, but I don't usually like doing recommendations. Anyway, Marcel says, I bought Philip Morris at 70 a few weeks ago. I'm hoping it goes higher. What would you do? Well, again, my question to anybody who ever sends in those types of questions is, what are you going to do, right? What was your plan? I think at some point I should probably do a special just on writing a trading plan, because it seems to me that a lot of people aren't mapping out what they think their trade is going to do. They buy something for whatever reason, and they hope that it just makes them money organically. Well, that's great and all, but part of being a professional at this and doing it for a living and getting consistency out of it is understanding that there's little nuances that you have to address. And if you don't write things down, you don't have a plan and administer that plan properly, then consistency is going to go out the window. So I will show Philip Morris at 70. All right, let's go by PM. Wow, interesting chart, actually. I don't own Philip Morris. I've traded in the past more as an active trader, but I'm looking at Philip Morris right now. And if the question from Marcella is, what do you do? I think you have 4 different options here. Now, of course, I think we could all look at this chart, and depending on how you want to draw your supply or demand zone, that's totally up to you. This is on snap mode, which is going to give me a little bit of a hard time, so bear with me as I take it off of snap mode. You've got this zone it's coming into. Really depends on how you want to draw your zone, but it's basically going to run you from about, call it 79 up to 80. All right, you get a $1 zone there that really had a difficult time back in October with aggressive move away, and here we come ripping back up into it. So I'm not that bullish on Philip Morris right now. There's two things that are coming to mind. Number one is the previous high that it made back here in October was nowhere near the high from September. So that's a little bit weaker. This is a super aggressive move. We do have higher than average volume, which is a really important one as well. If you look at how close we are to the supply zone, you're at 78, 60, and the supply zone's right around 90. So you're almost into it. So, I don't know, Marcel, how much money you were planning to make. You said you bought it at 70. If you got it at 79, you made $9 profit on a $70 investment. You're over 10%. You're looking at, what was that, 12, somewhere in there, 12% rate of return in what appears to me, I don't know when you bought it, maybe you're holding from May or July, but it appears to be like this is going to be a pretty significant gain for you in a very short period of time. I don't know where you thought it was going to go to. If you say you hope it goes higher. Now, those that watch this show know that I think there are four-letter words out there that, who is his name? George Carlin says we can't say on the air, and of course I won't say any of them. I think there's 7 words he says that you can't say. A lot of those have 4 letters in them. For me, one of the most foul, vile, disgusting 4-letter words that you can say is hope. So if you write me and says, I'm hoping it's going higher, it basically says that and I apologize for sounding condescending, but when you say you hope something happens, it means that it's out of your control and you probably don't know what you're doing. You're saying, I just hope it goes. That's no way to be a trader, right? To me, that it just screams that you're not prepared and you don't have a plan in place. So I don't like the word hope. Don't use that one. It's a bad word in the world of trading. As far as this chart says, could it go higher? Sure. If it breaks above 80, I think you've got a clean shot at 82, no problem. Unfortunately, you're hoping it goes higher than a supply level, which worked pretty good in the past. Now, there are some flaws to that supply level. For anybody who's an Online Trading Academy graduate, you can break that one down. I'm not going to do so on this show because I'm not here to teach you guys core strategy. That's for classes. But I do think you're going to have challenges as you get into that 79 to 80 range. Again, your options fourfold. Number one, just sell it all. Lock in your profits and be happy with it. If that's, if you thought it was going to go to 76 and you're at 79 right now, dump it, right? You can't go broke taking a profit, and it's a good profit. Step number 2 is to sell a portion of it. So I don't know how much you bought, but maybe you sell half your position, set a trailing stop, and let the other half run, and hopefully it goes to 82. Like the hope right there. I had to throw a little hope in there because you have no control over that. And maybe it jumps even higher. I mean, long-term, Philip Morris, let's go to a monthly. It has a lot of upside potential, but look at it from a monthly perspective going back 3 years. What has it really done? It's just been kind of drifting down. So I don't see monster upside potential here. It seems to me like something's wrong with Philip Morris at this moment in time. If you were a smoker in Southern California, you're pretty much banished from society, of cigarettes anyway. We know that they're getting back into vape pens and things like that, but Philip Morris I just don't think has the legs underneath it to go too much higher here. So I'd be more thinking of selling half. If it was me, I would sell half my position and let the other half run. Now, a couple other things you could do. If you wanted to, you could be buying puts as it comes into the supply level. I'm actually going to be looking at this one tomorrow, and thanks, Marcel, for bringing this to my attention because I don't normally look at Philip Morris. I will let you guys know I may buy some puts on Philip Morris tomorrow. It's coming there real aggressively. It's coming in that supply zone. Why not? I'll buy a 3-month expiration, so it gives me some time to let this thing do its thing. But I might be buying some puts, or you could potentially sell calls. Now this one's a little more confusing, Marcel. Let's say that you think it's going to go all the way up to 82. You could go out there, and I don't have the options chain open, but you could sell calls, basically saying, I'm willing to sell it if it gets to 82, which is your target anyway. And what happens is if it gets to 82 or above, let's say it jumps to 85, well, you simply sell it at 82 and you collect that premium that somebody paid you for the right to buy your shares at $82 a share. So let me see if I can bring up the option chain here real quick. I know it's after hours, but the option chain might be a little bit different, but it'll give us an idea of what you might be able to get as extra income on this since you're already in a pretty big winning position. Now, just to give you my 2 cents on this, given how fast and far it's moved recently, I probably would be more in the buying puts or selling half my position if I had to choose out of those 4 options I've just given you. So here's your Philip Morris. And the key here, since you're looking at Philip Morris, or sorry, this isn't PMT, this is PM. All right, so here's Philip Morris. With these options, a couple things. If I was going to buy a put, I'd be looking at going out 3 months. So if I'm buying a put, I'd be looking at going out into probably this March 2021, if I'm buying them because I want to give them time to work. If I'm selling puts or selling calls, I might go a little bit shorter than that. Maybe you could go weekly here. And I know it's not far out, but let's say you want to do 82s and you were selling calls, you're not going to get much there. You can get 10 cents. Big deal. You make yourself an extra $20 for a week though, right? And right now it's trading at 78, so it'd have to move $4 in 10 days. So maybe you do a 30-day. Usually a month seems about right for selling options. If you're going to do that and you're going to go for the 82s, you'd be making $62 per 100 shares that you own. Now, of course, that's a month out. But that's one way you could do it. It's not a lot of premium there, honestly, for me to be selling calls. I would be more interested myself in buying some puts as protection. As you can see here, there are a lot of puts available. Let's go out and bring up that chart again. So if you're going to buy some puts, it's kind of like, well, where do you think it's going to go? Probably close this gap. Maybe 76 would be if you're going to go out of the money. You could go at the money or in the money. That opens up a whole different can of worms here with regards to selection. But anyway, I want to throw those 4 options out there, Marcel, which is you could sell it all and be happy, sell a portion and put a trailing stop on the second half, which is probably my number 1 choice of what I would do. Number 3 would be buying puts on this one as a protection. Now, you could buy those puts outright, or you could continue to hold your position and buy puts as an insurance against it, meaning you still think it's going to go up, but you could buy the puts in case there's a sudden move down. That's like buying insurance on your home. Most of us literally are throwing money away every single month for homeowners insurance. Why are we throwing that money away? Well, it's a cost for us because what if something catastrophic happens and all of a sudden I have to repair my house or the house burns down? At least I know I was covered. And that's essentially what you'd be doing there. If you bought a put, you're basically saying, I'm just protecting against some catastrophic move down. If it doesn't happen, you just lose the premium that you paid for buying those puts. Anyway, those are your 4 options out there. Marcel, hopefully that helped you a little bit of clarity on what to do with your Philip Morris. Okay, what else do we got? I'm talking a lot on this one today. Next question. What delta do you use when you buy puts? That's up to everybody out there. Again, you talk to different traders out there. There is no specific number, Marcel or Okanola. Mentioned that a stop loss would be smart or a covered call. Yes, and again, I think the stop loss should be moved up no matter what. Right. Next question. Adam. Adam's one who sent in that question on Harami's on Friday's show, or Thursday or Friday show. He says, thanks for answering my question about Harami on Regeneron on Friday. Do you have any specific rules to trade a Harami? Now, I've shown you my rules before for trading a shooting star in a hammer formation. And this is pretty much the same. Now, before I show it to you, it's not like this is, some crazy proprietary, bizarre strategy. It's just simply a very basic set of rules that allows me to eliminate certain things that, in my experience, have been very risky for me. So I'll show you the picture. I actually did do little graphics on this one to make it look nice. But let's start with the picture of, and I'm just going to do a bullish Harami as an example, and then you guys can, figure out how to do this upside down and do a bearish Harami. So here's your bullish Harami. And again, the whole point here with the bearish or bullish Harami is price needs to be trending down. That's this little lightning bolt on the left-hand side of the chart here. You have a market that's trending down, could be really aggressive, could be slowly coming down. The sharper it is, to me, the better the formation becomes, right? Because it shows fear and panic out there. You've got this last big red candle, which basically shows a lot of pain and suffering in the markets, followed by this small little, some would call it a spinning top. You can have this look a lot of different ways, but basically you have this small little green candle that fits within this red candle. Now, to be fair, you can, let me see if I can change this. I might be able to change this on the fly. You can also do something like this where it should be a red candle followed by a green candle. That's generally what people want to see. But you could also have a situation like that where it's a red candle. Now, obviously, that's going to be not as powerful, right? Because the whole point of a Harami is it's cluing you into a potential change in trend that would most likely move to the upside. So ideally, you'd want it to be a green candle like that. So here's the 2 simple rules I go by, and this is for Haramis, it's for shooting stars, it's for hammer formations, and actually engulfings as well. So here's the 2 rules. Rule number 1. it must open below the previous day's high. Real simple, right? You put a line across the previous day's high, which is that little green candle, and it has to open somewhere down below it. I don't care where. It could be 1 penny below it, it could be $100 below it. It's just a rule I put in place for myself. And I'll explain why in just a second. Now, and actually the example I'm going to show you is from the Harami formation, or the Harami formation we saw on Friday on CMS. So rule number 2 says buy on a break above the high. So remember, it has to open down below that line, which represents the high of the previous day, and then has to rally back up. And when it breaks above that line, then what I personally feel is I have now put the odds in my favor. I spotted something that was weak. It's been in a big downtrend. It has that momentary hesitation, which ends up being the Harami formation, in this case, a bullish Harami formation. And then if it opens down below that, great. It's still showing a little bit of weakness. But then when it breaks the high, that's when sentiment kicks in, and I'm now feeling more optimistic that I could have more upside potential. Those are very simple rules. I mean, I'm not making this overly complicated. It's just saying, I feel like Blazing Saddles mango like candy. I'm trying to make it as easy as possible for me to understand and make sure that no matter what, I can replicate this over and over and over again and not make mistakes. Now, here's why I have rule number 1 saying it must open below the previous day's high. Great example would be the one we looked at on Friday, which was CMS. So I will try to do this quickly so you guys can't see it. Of course, you guys have already seen it. There you go. Ah, damn it. Well, anyway. Screw it. I'll just do that. All right. If you look at here, you can see that on Friday's session, guys, remember this chart, you see this big aggressive sell-off. Wednesday and Thursday were just brutal for CMS. We had a small little spinning top here, which could be argued that's not quite a Harami, but, in my opinion, it works. It still fits in here. So all we'd have to do is say, right? A lot of people would look at this and say, I'm going to go long because it's a Harami formation. And you know how you would have been burned? Because it gapped up. Instead of waiting for it to open below that line of 65.24 and then break above it, you would have entered long right as that thing opened, which was open at 65.86. So you basically left 62 cents on the table for no reason. I mean, you risked it right away because it gapped up to here. Now, fortunately for this one, it's sold off, which you might be asking yourselves, does it still count if it looks like this? Yes. All right, so it can do exactly what it did, which is, one of the rules is it's got to be down below this line and then break above it. So you can see here, this is showing you that the line was the top of that Friday candle. It sold off. It went down below 65.24, which is the peak from Friday, and then it came back above it. In theory, yes, you could go, and the trade is still valid once it breaks below that line and comes back above it. It's just basically confirming that that area is holding. That's all. Now, many times, and part of the reason that I've kind of written these rules out for myself is there's times where I'll buy it and it just comes straight down and I'm left holding a gigantic loser, right? It just didn't hold. There's also times where it doesn't even have a tail. It gaps up and just keeps on running and you're going, son of a, I missed it. I wish I would have made it. And it's oh well, it's part of trading, guys. Just who cares? A trade that got away from you, big deal. Leave it alone. Move on to the next one. So those are the basic rules. Now, it's a good question from Jeff. He says, where do you place your stop? Very good question. It's usually right below the low of the previous day. Now, this is a little tricky because, you could be using that line. Some people are going to go down to the low here. I would prefer to do it below the lower line here. You guys see what I'm doing is essentially saying, show me the 2 candles that made up the Harami formation, which is this big red candle and this little green one. And ideally, it would be below 64.38, which is this lowest point here. So I got to ask myself, if I can go long at 65.24 and my stop loss is 64.98, there's a few different pieces I need to be looking at here, right? Number one is that too wide of a stop loss? It might be. Obviously, what's my objective or target going to be? And does it fit within my ATR? So if I look at the longer term chart here in CMS, my target would probably be back up here at these highs. I'd probably say somewhere right around 67.41. So in this case, I'm looking to make $2.20 and I have a stop loss of 90. That's not 3 to 1. That's a fairly, not really a great trade. Now, does it change at all? And if I'm losing any of you guys, feel free to just type in where I'm losing you. I'm just running through thoughts in my head. If I do it from the low of the yesterday's candle, Friday's candle, then all of a sudden my numbers change quite a bit. I have 70 cents worth of risk trying to make $2.20. Now it makes 3 to 1. Okay, so I'm fudging things a little bit to make it fit my stop loss. Now the other question I have here is, and I hope you guys can all see that I'm now looking at a 3 to 1. It's going to work. The other part here is 70 cents worth it, right? Is that too tight of a stop loss? So one of the things I'll do is just bring up insert analysis technique. We can show, oops, I think I already have it enabled because I use it all the time. We're up here, average true range. And this thing's moving $1.66. Now, the question is, what time frame am I looking at? So if I'm looking at this on a daily, $1.66 might be, it's a lot, right? It wouldn't work for $1.66 on a daily time frame. But for me, a daily time frame, I'm looking at trades that are going to be lasting weeks to months. In this case, I'm not looking at weeks to months. I'm looking at maybe the next 3 or 4 days to get up to 67.40. All right, so maybe I'm going to switch this over and look at a 4-hour chart. Oops, not a 5-hour. I can't even type in the right time frame. Okay, $1.26. All right, it's still not great. It's still rather high. So meaning it's $1.26 ATR. That's how much it moves every 4 hours. And here I am with a 70-cent stop loss. It's a little risky. How about a 60, which is probably what I would be using. On the hourly time frame, you see I've got a 47-cent ATR. So on the hourly, which is the time frame I would use to execute this, because just look at the scale of the chart here. To me, this is going to take a couple of days to get there. I'd be using the hourly time frame. Therefore, this trade could potentially be made using those numbers, meaning a 70-cent stop loss. You're trying to make $2.20, and the stop loss would be in accordance with a 60-minute ATR. Valerie says, always daily candles for the Harami? Yes. I mean, look, here's the reason why you don't use intraday candles. Intraday candles, you don't normally get gaps, right? So if I'm using it on an hourly time frame, you're usually not going to get jumps up in price. And that's part of the reason these candles work, is because it's showing you motion. So dailies work well, weeklies work well, and monthlies, right? That's the bigger time frame pictures. I prefer them personally on dailies. All my filters, all my scans are always on the dailies with regards to these candles. I thought that was actually a pretty nice example here on CMS because it looked decent. It had higher than normal volume down here at the bottom. It had a pretty aggressive sell-off going into that demand zone right here. So I thought this would actually be a decent one, and it responded just a little too soon. So anyway, there's one example. What else did I have? I think that's pretty much the... there were questions. There's always questions asking me what I'm looking at for tomorrow. I'll give you two just for fun. WBA, and these are actually both shooting star formations. So here's another candlestick formation for tomorrow. This is Walgreens Boots Alliance. Are you sure that? Yes, I am. Yeah, I have some puts on the Russell. It's interesting because I've been doing a bunch with. I don't have a lot on the Russell. I think I have 10 contracts open. I have 2 on NASDAQ. All puts, by the way. And I'm offsetting that with other trades. I'm offsetting that with some Snap, both equity and put shorts. I also have FRS and NEO that I was selling some puts on and collected some nice premium for 5 days. So, when I look at WBA, a couple things right now come to mind. It's exactly the same thing. I would be out here looking at this saying, I'm looking for it to break below 43.73 tomorrow. I want it to open up above 43.73, and then I want it to sell off and drop below. If it does, I've got a target on this bad boy, which looks to be right around just below that 41, probably we'll call it 40.70, somewhere in there. All right, so now we can do the same thing. You do your analysis, you find out the reward to risk ratio is worth it for you. Granted, when I look at this chart, again, I am not a long-term swing trader on Walgreens Boots Alliance. I just think that the way this candle formed, with the shooting star, higher than normal volume, you'll probably see some give back tomorrow. And all I need as a shorter term trader is a little bit of intraday momentum. If I can pull, for some of you, you might be trading 100 shares and you're trying to get, WBA to go from 44 down to 40, trying to get $4. Well, if I'm trading 1,000 shares of it, I only needed to go drop 40 cents to get the same rate of return that you guys got, and I can get it intraday. So a little bit different mentality when you look at somebody who's swing trading longer term versus somebody who's shorter term looking for a day trading perspective. Okay, what else was on there? SPA, oh, there's another one, SPG. Now, SPG might actually be one that I'm looking at longer term. The reason SPG is, again, as I told you on Friday or Thursday, I can't even remember what day it is anymore. My thoughts on these markets are you're going to see rotation out of certain sectors and pour into others. I think if we go into another lockdown, commercial real estate will have a pretty big punch in the face. And you guys can see we've got a really nice shooting star forming today. And not only does it have a nice shooting star, it's after this crazy gap up, and it has extremely high volume compared to norm. Now, you know, that doesn't necessarily mean that it's going to go down, but when you have a big gap up with very high volume, usually what that means to me is somebody just got caught holding the bag and it's about to drop because money came pouring in. That's what shot it up. And all of a sudden you have nothing left to push it up and you get that move down. So this is probably a much more powerful shooting star for tomorrow. Again, same thing. You know, you're looking at a close, if it opens up above 78.85 and then closes down below that or crosses it during the day, then you got a trading opportunity, and I think that's one we're taking. All right. Questions. I'll pause for a quick second as I can catch my breath here because I've just been talking for half hour straight. All right. Let me go to, I got a couple more, and then you guys, we can open up to free form if I have time. Jeez, I didn't really think we'd be going this long. Tim sent this one in, and thanks, Tim. Tim says, please analyze the British pound today. Thank you. Okay, we'll look at the British pound. Just if you're trading, I'm assuming you're talking about GBP USD. GBP USD, not the futures contract. Either way, here is the British pound. And you know, look, I'm with David Warner on this one. I'm definitely bullish on the pound. Although this week, you got to be real careful with this one. Reason being is on the 19th, the EU has pretty much said, hey, this is the deadline for Brexit because if we don't get this done by the 19th, we don't have enough time given the holidays coming up because heaven forbid we should get a deal done before, you know, we interrupt our holidays to get this deal done that's been going on for 6 years. What are we, elected officials? Oh, I'm sorry. Yeah, my mistake. Anyway, they're saying that if you don't get the agreement to the EU and let everybody look at it by the 19th of November, then the deal will not get done. Those treaties will not be ratified. They won't have enough time to run it through legal or anything, get approvals. So it won't happen by December 31st, which of course is the final deadline there. So I would personally say just be really careful here. I would say don't trade the pound, especially getting towards the tail end of the week, especially on that 19th. You could see just real wild swings depending if there's any hostility with the EU. If I'm the EU at this point, I'm going to start playing hardball because they're just dragging it on and dragging it on and dragging it on. Other than that, look, I think you've got a decent shorting opportunity. And you guys can see this nice little shooting star that if you followed the rules I just showed you, would have been a beauty. Shoulda, coulda, woulda, right? 3 words that mean nothing in our world. You also have one back here on the 2nd of November, and we could go on and on. Nice little Harami formation here, quasi Harami. Yeah, I agree. Big Eb, gamble at this point. And we're not gamblers. You know, if you want to take a flyer on it, then go for it. But I just think it's too dangerous. You know something major is going to come out. Personally, I don't see it happening as being a good deal with these guys. So, from the trend perspective, if we did not have this deadline of November 19th Brexit, I would say you're probably okay to be buying this recent pullback up until right around 133.50. Maybe 133.40, yeah, somewhere in there. But other than that, I just don't see the risk being worth the reward at that point. Okay, there was one that was actually painful to watch. I had to throw this one in for today just because it's brutal, and I apologize. This is for Kevin. Kevin says, help, I bought BioNT Tech at $70. I moved my stop loss up to $99.90 on November 12th. I logged in today, and the shares are still in my account. Is this the broker's fault? So let me bring up a chart here, and I'll map out some levels for everybody so you guys can see exactly what he's talking about. Ticker symbol on BioNet Tech is BNTX. NTX. I won't ask you why you bought it or what the other reasons are. Said he bought it at 70, so I'm going to throw a couple lines on your screen just to see the perspective of where this gentleman got in. So 70, it says, is where he's bought it. And said he moved his stop loss up, and I'll type it in here at 99.90. Okay, I actually like your placement here. I'm assuming you did that just a couple days ago. But you can see the stop loss. Makes sense, right? You had this thing starting to sell off after a pretty big run-up. So obviously you bought at 70, you want to get out at 100, you'd be happy with a $30 gain in just over a little, under 2 months. Great. Why did this happen? It happened for one of two reasons. I don't know if it's the broker's fault. Unfortunately, unless you sent me a screenshot of exactly how you input that order, I couldn't tell. But normally what happens is it breaks down to one of two variables. Well, three variables. Number one is you just put the order in wrong and the system kicked you out and you didn't see it, right? Order rejected if you're in TradeStation. That's usually what the computer will say. This option number two would be what Yu Yang is saying right here, which is a limit stop. Yeah, this is a big problem for people sometimes. If it's a stop loss, if you did 99.90 on this security, I'll bring up the chart here. If you said do it at 99.90 with a stop market, your order would have been executed probably at the opening price at 96.64. Now, why didn't it get executed at 99.90? Because the first trade was at 96.90 or 96.64, right? So you would have been filled right as this candle opened this morning. Now, if you put a limit stop, which is what Zhu Yang is saying, is depending on how you put it, it may have jumped your price. So let's say you put a stop loss of 99.90 and that was your stop limit. And you simply just go up here and say stop price and change it to stop limit. And now what happens is because it gapped down and its first trade was already over $3 below the lowest that you were willing to sell, it's not going to execute you. You won't get out of your trade until it comes all the way back up and hits 99.90. That's the dangers of a stop limit. And personally, guys, I think you should never, ever, ever use for a stop loss a stop limit order. The only reason that you could possibly want to use one is you're trading something that's very thinly traded and you have a big block of shares, because what happens is you could create a colossal move in price. So you use a stop limit. And let's say in this example, you said stop loss at 99.90, but a limit order of, let's say, 99. So you're giving yourself 90 cents worth of wiggle room for slippage, which can happen. The other thing, and I think that this is probably what happened on Friday, and I don't know if you can see it on the platform, but under duration here, there's a little thing, I can't zoom in, guys, sorry. There's a little thing that says duration, and that means how long do you want this order to stay in effect. And you guys can see there's a whole bunch of different stuff here. Day, day plus, GTC, GTC plus. A lot of platforms offer this, especially the direct access ones. And you may have just put day, and that's my guess, is you selected day order, which means as soon as regular market hours close, so 4 p.m. Eastern Standard Time, your order is kicked out. It's no longer sitting in the marketplace. If you want it to stay in force, you could have done something like a GTC order or a day plus. Plus simply means it trades in the after hours, but your market orders don't work in the after hour session anyway, right? Just limit orders in the after hours. So if you want that order to stay in place whenever the market's open for the indefinite future, you would have clicked GTC, which would be good till cancel. My guess is that's probably what happened, Kevin, is you probably had it on a day order, and as soon as Friday closed, the system booted it out, you opened up this morning, and that order was gone. That's probably most likely what happened in this situation. All right, we are rapid firing a ton of different questions out there today. I got one more. And the only reason I'm doing this is because this trade that I took happened right around this time. So the last question, at least from the ones that were sent in overnight, I'll see if I have time to get to some of the other ones. I have to run soon after the show to get somewhere by 3:30. Gene says, make me feel better. It's not that kind of show, Gene. We don't do that here. A friend of mine convinced me to buy GPOR, which is Gulfport Energy, back in April, just as it broke above $2, 10,000 shares. So, okay, $20,000 investment. I'm still holding, but fear the worst. It's the first account I've ever blown up. What's your worst trade ever? So I like that you're not asking me what to do, because I think you know what, you're in a bad spot. I looked at that chart. I've never actually looked at the security before, but let's go with GPOR, Gulfport Energy. Oh, goodness. I'll start off on a weekly. So here's your weekly time frame of it. And I don't know what your friend told you. You might want to reconsider your friendship or why they told you to get this one. My guess is he probably owns some share. He or she owns some shares and was trying to get you into it just so you can boost the price up as well. So you look at a chart like this, and of course our human gut instinct says, wow, I'm going to buy it at $2. This is the turning point, right? Because it looks, I think you said you bought in April. So right back in here as it crossed $2. I'll put a line on the $2 mark so the viewers at home can see it. Put in $2 even. So you can see this green candle right here in April. That's where he went long. And you had a couple weeks of glory. And then all of a sudden, you are getting crushed. And human nature tells you when you buy something like this, like, oh, wow, it's going to go all the way back up to 13. I'm going to be rich. Got a new Bentley. Of course, you could zoom out even further, and you could say, wow, this thing could get all the way up to $60, $70 where it was in the past. Remember, the trend is your friend to the bend at the end, and this thing is just miserable, right? There's no, other than saying it's unbelievably cheap, I don't see any reason why you want to buy this one. All right, if you ever sent a question to me on what you should do with this one, I would have said short from the get-go. Now, I would have also said, to be fair, and you guys know the way I view things, I would have said back here that there's something happened, something triggered this, a potential change. So yeah, you could have bought in, and yeah, I do believe now because it has an F next to it. You said filed for bankruptcy. Yeah, I believe the F here is bankruptcy. You're probably, I hate to say it, Gene, you're probably gonna lose all your money on this one. So you're lose 20 grand on that one. So you know what? It's your lucky day, Gene. I will make you feel better. Yeah. Yep, 13 cents. So I will make you feel better. And there's multiple pieces here. Number one is, you should always have had a stop loss in place. So no matter what anybody tells you to buy or what you analyze and decide to buy, make sure that you have a stop loss in place. Number two, if somebody tells you to buy something, for the love of God, do your own research, right? I cannot tell you over the years how many people have told me to buy this stock, that stock, do this, do that, and almost every single one of them lose. And usually there's a vested interest on their part to make me buy it. So I'm always skeptical when people say things like, hey, you should buy this company. All right, I'll look at it. Most of the time, I don't buy any of that stuff. It's a strange chart, Valerie, but it's also garbage. I mean, this thing's done. Unless their assets get bought up, but we're not even that kind of fundamental show, so we'll just leave it alone. So let me show you the worst one that I ever made. This goes all the way back into 2013. You might remember a company called Best Buy, BBY, or you might still know this company. Back in 2013, it was one of the biggest gaining stocks for the year. And I'm looking at it going, you got to be kidding me. Amazon is going to destroy this company. All Best Buy is a physical storefront to go in and buy all the stuff that you want to buy at Amazon cheaper. So you go in, you can feel them, you can open up the electronics and check all this stuff out. Oh, this is heavy, good earphones. I like these. Great. I'm going to go right to Amazon. I'll even do it while I'm in Best Buy, and I'll look up those items, and it's $68 here. Sweet, I can get it for $54 delivered to my house tomorrow on Amazon. Click the button. Thank you, Best Buy. So to me, it was just junk. What does the store even serve a purpose for? So what did I do? Started buying puts, and I bought $100,000 worth of puts. I earmarked it, so this is going to be my gamble. Yeah. This one was pretty brutal. So 100 grand for this specific trade, and I'll show you how it all panned out. Now, in that, you guys know me. I tend to take some flyers every now and again just because, hey, you know what? You live by the sword, die by the sword. So you guys can see here, this is 2013. In 2013, Best Buy went from, I'll give you the exact percentage, had a 306% rate of return in 45 weeks. So less than a year, up 300%. Now, my options, the mistake I made was my options expired the third week of November, which I'll see if I can find the exact. It's right there. I think it was the third week. So it was just before this drop. So basically, I bought 100 grand. I bought some, and then I bought more. Ultimately, it was $100,000 worth of puts on Best Buy. Yeah, that's a lot of puts. A lot of puts. And my options expired worthless. So I'm hanging my head, feeling dejected, like, man, oh well, it's. I earmarked it. I knew the risk going in, and I paid for it. Did you guys see what happened the week after? Note to self, and for all of you, do not short any. I don't care what the company is. Do not short any stocks, especially a retailer stock going into Christmas. You short it for January's. If you think Best Buy is going down, you buy the January puts. You do not buy the November puts because it's the holiday season, right? It was just this huge move up. Now look what happened. Yeah, missed it by that much. I'm telling you, this would have been a 7-figure trade. The next week, it already closed down. This was just so brutal to watch, guys. It was absolutely gut-wrenching. The next week, at one point, it was down 10% for the week, but at one point, it was down 13%. And then by the January expiration, it had dropped 50%. And I had $100,000 worth of puts. So, this it is what it is. It sucks. It's just trading. You're obviously I'm probably scaring a lot of you with these numbers, but I take chances like that every now and again. But I know exactly what that risk is going to be, and that money, that's not, hey, it's taking food off my table. I don't want to lose that. But ultimately, sometimes we have to take some trades that are a little bit risky. I was adamant this thing was going to crash, and I was absolutely right. 50% drop in 11 weeks, and it was all because I was just too early. If I just bought the January expirations, I would have just killed it. Anyway, that's Gene. I hope that makes you feel better. You got a $20,000 loss going on. Mine was $100,000, pretty bad. And I don't know if I would say that's the worst trade I've ever made. From a monetary value, that's the biggest loss on one trade. But there's been some other ones that have been pretty significant that didn't have that type of capital loss, but different factors behind them. And maybe down the road I'll explain what those are and torture myself through reliving my horrible past. All right, let me go into your announcements for tomorrow. I'm just looking at the clock. I didn't realize how quickly time has flown here today. Yes, Ju Wang, I am still short IWM. Yes. Jeff, it's not as simple as that. Like, to me, that's pure gambling, right? If you put 100 on black, mathematically the odds are against you, right? Because you've got black, you've got red, and you're like, oh, it's 50-50. Nope, because you got green as well. There's two green. I think there's 2 green spots. So that is a gamble. This was, I had done research. I looked at the numbers. Best Buy they were claiming they were spending like, it was like $50 million on new marketing campaigns, and their same store sales went up by like 0.5%. You spend that much money and you get a 0.5% bump on the needle. That you basically threw that $50 million away, and it was like these numbers just sucked. They were horrible, and unfortunately, it didn't catch up to them until that January number. So, while it may look like a gamble, like your roulette example, for me it wasn't a gamble. It was a high probability thing. I just mistimed the damn thing, and don't ever short a retail company going into the holidays. Bad idea. All right. So let me show you economic calendar here before I can get to my appointment. There you go. For tomorrow, this is for the 17th. This is a little hard to read, guys. There is so much happening tomorrow across the board. Canada's got housing starts and wholesale sales. The big number for us, which will be interesting tomorrow, will be retail sales numbers. That's coming out at 5:30 in the morning Pacific time. For British pound, well, let's see. For the U.S., we also have capacity utilization rate and industrial production numbers, both of which are expected to increase significantly. Retail sales, by the way, are expected to drop a little bit. You also have TIC long-term purchase for the U.S., and then you have Magnum PI Day for the British pound, which is CPI, RPI, and PPI numbers coming out, and that'll be tomorrow night. On the earnings front, as my voice is disappearing, we kick off retailers. So it's convenient that Walmart and Home Depot and Kohl's, which are major components of the retail number, they all report earnings before market open. So you won't really be able to make too many trades there off that. But the remainder of the week has a lot of retailers reporting that we may be able to anticipate how they're going to react based off of the earning or the retail sales data. NEO also, I thought NEO reported already. Who was in there saying buy NEO? I actually sold some. I sold some puts on NEO. Koja says, please buy NEO. I sold some puts on NEO deep out of the money. Not deep. I'll show you the NEO trade. Let's go to the daily on this one, and we'll wrap her out. So I have I think I sold the 35s. So I went way down here, way below the closing of this gap, right? 35. I sold the 35 puts, and the rate of return was something like 9% for this Friday. So I sold those options. So I guess technically I'm bullish on NEO because I don't want it to drop all the way down. No thanks on buying NEO. Yeah, look, I'm not that big on buying NEO either. But either way, I thought that the sell-off we had on Friday was pretty big, and that's what made me buy the 30 or sell the 35 puts and maybe collect some nice premium along the way. I mean, essentially, if I get executed, if I'm not mistaken, is it 35? I thought it was 9. It might be. I can't remember how much I got for these, but I made a pretty good rate of returns. 9% rate of return is what it ended up being. Okay. Let's see. I know we're supposed to have Tilly Allison on the program today, guys. Her little boy was sick, so she couldn't come on the program. Maybe we'll reschedule for later in the week. Tomorrow, I'm going to have Ryan Watkins. He wanted to do something about talking about price reading and reading price action. So great. Love having Ryan on. So Ryan Watkins will be our guest tomorrow. If you have any questions for him or myself, you can always send those in at TraderMerlin@gmail.com or go to TraderMerlin.com. I have not updated the calendar yet. I know. I'm slacking. For those of you who wanted the crypto stuff, that's my mission for tonight, is to gather all that in one file. I'll probably make a zip folder and post it. If not, maybe I can just do it through the my Twitter feed and have that information available there. But I want to kind of gather a little folder of information for this crypto stuff I was telling you, and then I'll send it out to you guys. That's sent in the email requesting it. So I got a good, couple dozen of you have asked for the info. So I'll try to get to that as tonight's project. All right, everybody, that's going to do it for me before my voice completely disappears. Hope you enjoyed today's show. Be careful out there. Yeah, it was a ton of info on today's show, right? We covered a lot of topics out there. Hope you enjoyed it. If you do, obviously, give me a little thumbs up out there. Best thing you guys can do is share the show, leave comments, and spread the word. Until then, happy trading, everybody. I'll see you tomorrow with Mr. Ryan Watkins. Take care.